Unlock the secrets to financial success during the 2024 recession and pave your way to riches. Act now. Hello there, and welcome to an exciting discussion that has the potential to change your financial life. In this video, we're going to delve deep into the topic of how to leverage the upcoming 2024 recession to build your wealth and secure your financial future. Now, I know the idea of a recession can be daunting, but as the saying goes, riches are made in recessions. So, if you know what you're doing, this could be a once-in-a-generation opportunity to dramatically increase your net worth. Let's begin. Before we dive into the opportunities, it's crucial to understand the economic landscape you'll be navigating. A recession is typically characterized by a surge in unemployment, declining wages, a decrease in consumer confidence, and the devaluation of various assets, from stocks to food and energy. Earnings of companies take a hit, with many lowering their forecasts to brace for potential economic downturns. This often leads to layoffs, as companies cut expenses, and unfortunately, employees are usually the first to be let go. The data suggests that the U.S. economy could lose around 175,000 jobs per month. Investing in stocks. At present, all major stock market indexes are down by around 20–30%.
We talked just a couple weeks ago, it feels like a lifetime ago, about leaning into duration, about even more so stress in the banking system confirms your view. The market's come toward you. Are you doubling down? Do you feel it even more so, or are you starting to question it?
No, I'm not questioning it at all. We're actually looking for an opportunity to add more duration to our portfolios. We're looking at the front end of the curve, 2- and 5-year treasuries. We're expecting a 50% backup from the rally that occurred in March. It puts the 2-year somewhere around 430, the 5-year somewhere around 380. We'd be a buyer there. We think recession is inevitable by the end of the year.
And experts like JP Morgan predict another potential 20% drop from current levels. But let's put this into perspective. Historical data since 1946 shows that the average bear market decline is approximately 30%, with the most severe drop occurring in 2009, when the S&P 500 fell by a whopping 57%. Bear markets during recessions tend to be even more severe, with an average drop of 34.8%. The critical point to understand is that the bottom usually occurs when investors reach a point of capitulation, and this marks the beginning of a market recovery. I'll discuss how you can benefit from this shortly. Real estate opportunities. While the performance of real estate markets varies by location, national housing price declines are relatively rare. However, current forecasts suggest a 7% decline in national housing prices, with worst-case scenarios anticipating a 10% to 15% decrease, especially if interest rates continue to rise. Some regions, such as parts of Florida, Arizona, Idaho, and Southern California, are deemed more vulnerable and could see a drop of up to 25%. If you're in a stable financial position and intend to stay in your property for the long term, this may not significantly affect you. Still, if you're looking to invest or buy a house, opportunities may emerge, which we'll discuss shortly. The importance of cash. Traditionally, cash was viewed as eroding due to inflation. However, when other assets are declining in value, cash can become a safe haven. Even billionaire investor Ray Dalio acknowledges that cash is no longer.
How would you think about deploying capital? What would you advise people here when you think about trends that you would like to latch onto from an investment perspective?
Well, I guess a few things. First, I want to be in the right places.
Geographies.
Right.
Yeah, okay.
Right. Okay. I want to be where the action is, where there's the civility and all of that kind of thing. I'd like to have diversification, because what I don't know is going to be much more important than what I do know. Diversification can reduce your risk without reducing your return, if you know how to do it well. And then I have to pay attention to the implications of the great disruptions that are going to take place, because the world will be radically different in 5 years, and it's going to go year by year, become radically different. Next elections, the debt situation, all of these things are going to change. And then with the new technologies, it's like going through a time warp. We're going to be in a different world, okay? And the disruptors will be disrupted. So I want to know, I don't need to pick those who are creating the new technologies, I need to really pick those who are using the new technologies in the best possible way. They're not less part of the bubble, and I don't want debt. I don't want to own debt, bonds and those kinds of things. Temporarily, right now, cash I think is a good
because rates are where they are. Yeah.
Because and it has its more the interest rates are fine. I don't think it'll be sustained that way because of the issues that we're talking about. So those would be my themes.
Or trash. Fund managers are holding more cash than they have in years, and Citigroup suggests that cash is the only asset that can act as a hedge during a recession. Seizing the opportunity. Now that we've explored the economic landscape and the opportunities available, let's discuss how you can use the 2024 recession to your advantage. 1. Reframe your belief. First, it's crucial to reframe your belief about market downturns. Rather than viewing a falling market as a bad time to invest, see it as an opportunity to buy quality companies at a substantial discount. Warren Buffett famously said, "When hamburgers go down in price, we sing. When hamburgers go up in price, we weep." The same logic applies to stocks. A market decline can work to your advantage. 2. Less competition. Secondly, understand that in tough times, many large companies become risk-averse, cut back on expenses, and play it safe. This creates opportunities for smaller, more agile companies to thrive. One study revealed that companies that continued to advertise during recessions saw a boost in value and positive growth in the years following the recession. 3. More opportunity. A recession serves as a natural selection process for businesses. It clears out companies that can't sustain themselves, making room for newer, smaller businesses to flourish. Much like a forest fire clearing the way for new growth, the economy undergoes a similar cycle. 4. The bull market. After the bear market. Remember that after every bear market, a bull market follows. Historically, the S&P 500 has seen an average drop of 29% during a recession, but it rebounds significantly afterward. The average return the year after a bear market is approximately 40%, and within 2 years, the market typically experiences a 58% increase. So, investing throughout the downturn can be more profitable than waiting. 5. Act before the confirmation. The key to thriving during a recession is to act decisively before it's officially declared. Recession announcements often come with a substantial time lag, typically months after the economic decline has already begun. Steps to seize opportunities. To make the most of the impending opportunities, consider taking the following steps. 1. Scale back your expenses. Start by tracking your spending meticulously. Identify areas where you can cut unnecessary expenses and operate your life more efficiently. Develop a comprehensive plan for what you would do if your income were to decrease by 20% to 50%. This might involve creating emergency funds or seeking additional income sources. The objective is to be financially prepared, ensuring you can withstand the unexpected financial challenges that a recession can bring. 2. Hold on to some cash. While investments can yield lucrative returns, maintaining a portion of your portfolio in cash is a prudent strategy during uncertain times. This provides you with the financial flexibility to seize investment opportunities when asset prices are at their lowest. Having cash on standby can also offer peace of mind, knowing you have a financial cushion to fall back on in case of unexpected emergencies. 3. Protect your career. Your job and career are often your most valuable assets. Therefore, focus on enhancing your skills and qualifications to secure your current employment and income. A recession coupled with a job loss can be financially catastrophic. Now is the time to invest in personal and professional development to make yourself indispensable in your current role or to improve your prospects in the job market. 4. Invest long-term. In terms of investments, it's vital to continue your regular investment routine. Even during a recession, maintaining a long-term perspective is essential. Employ strategies like dollar-cost averaging, where you consistently invest a fixed amount at regular intervals. Historical data shows that this approach has consistently yielded the most profitable outcomes. While it might be tempting to pull out of the market, the evidence suggests that staying the course and continuing to invest will be more financially rewarding in the long run. 5. Diversify your investments. Diversification is your shield against significant losses. Ensure your investment portfolio is diversified across various asset classes, such as stocks, bonds, real estate, and international investments. A diversified portfolio provides stability, as it is less likely to be severely impacted if one asset class experiences a downturn. Diversification spreads your financial risk, increasing the likelihood that your investments will weather the storm. The 2024 recession has the potential to be a once-in-a-generation opportunity to build your wealth, and it's crucial to be prepared. Reframe your beliefs, capitalize on the opportunities, act before the confirmation, and diversify your investments. While it may not be easy, staying committed and informed can lead to significant rewards. If you found this information valuable, please like this video and subscribe to our channel for more amazing content. Thanks for watching.